Welcome to another episode of Stately Investing with your host, Burnett King. If you like the content I'm putting out there, give us a thumbs up. If you love the content I'm putting out there, give us a subscribe. It really helps the channel. If you have any questions, feel free to leave them in the comments section or send me an email at statelyinvesting@gmail.com. And let's get started with the show. So we're going to start this episode off with a quick review of my passive income stream for the week. You can see it's a little better than last week, right? The coronavirus is still going on and we're still in this environment of uncertainty and fear. But it's better than last week. So my value right now is at 10,917. So about to hit the 11,000 mark here. Cash flow overall looks good and market gains are still in the red, right? So we did recover some over the course of the week, but not enough to offset last week. So you see the big dip here and we're working our way back up. Who knows where that will lead, right? Will next week be just as good and hopefully recover even more? Or will we have more fears around the coronavirus as it starts to spread throughout the world? So let's look at the weekly view. You can see the return for my portfolio was 3%, a positive 3%, and the gain was 320. Some of that due to dividends, some of that due to market gains. So today's episode is going to explore what I do when I analyze my portfolio. So I look at my portfolio monthly, right? So I don't tend to look at all of the numbers and everything that's going on every single week or every single day. I like to give my portfolio a chance to do its thing without investigating too much, because the more you investigate and research, the more you have a tendency to want to alter things. And remember, my income stream or my passive income portfolio is built in a way that I shouldn't really have to touch it. So today I'm going to show you guys how I analyze my holdings, how I analyze any holdings that might be new, right? So things that I might be researching, thinking about adding to the fund, whether that's learning through my own independent research or suggestions from other dividend investors, or just things I read in the news or activities. So we're going to talk about that today, but primarily we're going to do some analysis on the existing portfolio. So let's go to holdings again so you guys just can get a quick view of everything that I'm holding in this portfolio, and we'll go through it in more detail, but you can get a quick overview. You see I have 42 holdings, again totaling about $10,917. Cost basis was $11,347, so that's why I'm down in my unrealized gain. So what I typically do is I have a portfolio in Seeking Alpha. So Seeking Alpha will show you can add all of your stock symbols to it and show the portfolio, and it gives you a lot of data. It gives you things about holdings, right? So you can see kind of the latest prices and the changes, overall performance over the week, month, year. It has a lot of useful tabs once you have that portfolio in there. So I highly recommend putting all of your stock tickers in here, and you can also get emails, right? So this is how I also keep track of whether or not these companies are changing their dividends and whether they are increasing the dividends or decreasing the dividends or remaining in line. So that way, if they're decreasing their dividends, I know that's something I need to look at right away. The way that Seeking Alpha does this, you can get notifications and it'll send emails to whatever email address you want. I have a separate email address just for these news alerts. And then within that email address, I have a filter that will actually look just at the dividend statements and figure out and make sure it gets sent to a folder that's just around the dividend statements. So I make sure that I do that. But today we're going to look at this tab in particular, which is the dividends tab. And the easiest way to do this is to copy and paste. So I typically will just select everything in this chart. And there's actually an extra stock in here because it's one that I'm researching. So that's the one thing I do have to remember is if I'm researching any stocks for the month, I make sure I put it into the portfolio in Seeking Alpha first. So that way I can pull back the dividend information. So let's look at this tab. I always create a new tab for every analysis I'm doing. And today is the 7th of March. You can see this is some old data. Let's paste in the new data. So the stock that I'm investigating is Disney, DIS. And so I'm going to highlight that one like a different color. It doesn't really matter what color. Let's just pick blue for today, because you'll see as I go through the different metrics, I'm going to look at, I'm marking things red and green based off of their performance. So let's do that. So first, I like to sort each category that's important to me. Typically, what's important are the dividend yields. So let's mark these a specific color. So let's do purple. And actually, let's not do purple. Let's do yellow. So yellow is important to me. The payout ratio over like a 4-year period is actually not that important to me. The immediate payout ratio is more important to me. So I look at that. I look at dividend growth rate over 5 years. So this compound annual growth rate, CAGR, as it's typically abbreviated, will show you exactly how much the dividend has grown over a set period of time. So this gives you, Seeking Alpha automatically spits out a 3-year CAGR and a 5-year CAGR. But again, I'm looking more long-term, so I tend to look at the 5-year and ignore the 3-year. They're usually pretty similar anyway, unless it's a new stock. So then I also look at the dividend yield over 4 years. So it's not only important what dividend yield it's giving me now, but overall, like in the past 4 years, what's the dividend ratio look like? Is it, something that's a high yield or a medium yield or low yield? So those are the 4 columns we're going to sort and look at. And then essentially I just sort them, right? So let's sort this from Z to A because we want high dividends. So ignore the blue line over here for Disney. We can actually just get rid of that for now. That's the easiest way to do that. So select that row. So let's look at the dividend yield. So right now, my current highest dividend yield is MO, which is Marlboro, and that's because their stock price is being hammered right now. So that yield looks a little artificially high. But what I like to do is mark the green ones as things that are above average and red as things that are well below average. So let's take an average of each of these columns. Actually, let's just start with this column and then it makes it easy. So average of the following column, and then we can drag that across, right? So we look and my dividend yield average, actually, let's highlight these. And to get like more analytical, we could look at standard deviations. Actually, why don't we do that? So let's look at standard deviations away from the mean. So I don't know how much you guys know about statistics, but let's assume that this data is following a bell curve or a normal curve. The standard deviation is like how much variation is there within your data set, and then looking at how far away the current value you're looking at is away from the mean or the average. So let's, the nice thing about Excel is they'll give you a standard deviation formula of the data. They'll give you a number, right? And so low values would be anything kind of below, like a mean minus that, and a high value would be average, average plus that standard deviation, right? So let's shrink these down a little bit so they look more reasonable. I can read these. There we go. And then we'll drag these across. Let's get the formats of these things going so they match. So I know I'm doing some of this a little fast in Excel, but don't worry about the formatting, right? You'll get the hang of this eventually. So for my first category, right, dividend yield, I want to look at the lows first, right? So anything that's below this 2.14 is subject to being a low dividend yield. So let's just mark those. Let's call these out here in red, right? So low dividend yield is bad. Anything that's above 5.17 is high, so that's good, right? 5.17 is right here. And let's Mark those as green. All right, so that does my first column. Payout ratio is actually a little backwards, right? So you want to you want lower payout ratios. So payout ratios are how much money or how much cash the company is paying out of their kind of revenues and I think it's out of their profits that they are paying out to look at the dividend to send out dividends to stockholders. So you want a company that can sustainably maintain their dividend or grow their dividend. So a low payout ratio is good. So these numbers look a little reverse, right? So anything below 39.32. So let's again sort this. Let's sort from low to high, right? So anything that's below 39.32 is good. So we'll mark these as green. And anything that's above 76.74 is bad. So we'll mark these as red. Okay, so then CAGR or dividend growth rate 5-year and dividend yield 4-year will follow a normal pattern. Let's sort these high to low. Some of these don't have any data, right? Because they haven't been paying out a dividend for 5 years. So, you know, that's a little like hard to analyze. I typically will mark those as red, right? Because there's not enough data to know, or just leave it as neutral. Like you don't really know what's going on with it. So let's mark these yellow. It's kind of ambiguous, right? So we're not going to count it against it for anything, but may or may not be a good thing. So then it looks like the low value is anything that's below a 3.09. So these values here looks like they're pretty low in value. Mark those red, right? And anything that is above 16.31 means it's a fast growing dividend. So those are things that we like, right? This column is actually the most important column because these are the things that I care about the most is my dividend growth. Over time, I want stocks that are going to speed up paying me dividends or pay me more. I shouldn't say speed up, will pay me a higher yield or pay me a higher amount of dividends because they're growing and they're allocating more money to their dividend. So like an ideal combination, and which you won't often see, right, is a high dividend growth rate and a low payout ratio, because that means the company just has cash to burn, and so they're going to need to up their dividends over time, and that's a good thing, right? So then let's look at dividend yield. You know, again, it's similar to what we looked at here in column D, but we want it a little more. Actually, let's zoom in a little bit. Zoom. So you guys can hopefully read the numbers a little better, but I'll have to scroll. So if you look, anything that's below 2.3 is bad, and then anything that's above a 4.4 is good. So we'll sort again. Let's do high to low. So 4.4, I believe, or 4.44 and higher. So these companies here, let's mark them as green. And then these companies here, anything that's below, I think it's, 2.3 is bad. So then what I do is let's sort by symbol. So just alphabetical order again, and we look and see what has colors and what doesn't, right? So anything that's kind of neutral, middle of the pack here, there's no change, right? So for now, let's put no change. Anytime you don't really see a color for anything, you can put no change. Let's call this column notes. And what that means is I'm not gonna add it. I'm not gonna like increase the amount of allocation or buy like a high amount of that stock. I'm not going to remove it as well because it's not underperforming. All right, so then let's mark all of the no changes. I might speed this up a little bit so you guys aren't having to watch me do all of this work. You know, while we're doing this, if you have any kind of comments about how I'm evaluating or other things I should look at, things that you perhaps look at when you're looking at your dividend growth portfolio, feel free to leave them in the comments. Again, make sure you give me a thumbs up if you like what I'm doing, subscribe, tell your friends. Okay, so I think I have, there's one more, all the markings for no change. Most of your portfolio, if you have a big enough portfolio, will be in this category because, you know, they're pretty stable, right? These are pretty stable, but you're just wanting to look at outliers. So what I tend to look at is, first, let's look at their yield, let's look at their yield and then see what their payout ratio is, because that will tell me if they have some room to grow. And then also their CAGR, like their dividend growth rate over 5 years. So Apple is actually pretty good, right? So if we look at Apple, it has a low dividend yield, a low 4-year dividend yield, but a low payout ratio as well. And so this is actually why I started investing in Apple, because I think Apple has a ton of cash. And so Apple is able to support a high dividend, but they don't currently. So I want to invest, now, and so watch that dividend grow over time. So theoretically, this would be something that I want to increase my allocation. AbbVie is another company that is similar to this, right? It's even better. So they are growing their dividend rapidly, and their dividend yield is already high. Probably because their stock price has dropped a little bit recently, but when you see all greens, that's typically an increase sign. Apple might be a stable. We might actually leave this as a stable because we can't increase too many things. And this had some reds, right? Their dividend yield is low now, but it's a potential increase. So let's say stable, potential increase. Right, it all depends on how many things I'm increasing or including. Like if I bring Disney into the fold, I'm going to need to decrease some other allocation. So the next stock we're going to look at is Ben. So this is a financial stock. It shows us that their growth is fairly low, right? Like 2.53 is not the fastest growing stock. But their yield is actually pretty good. So I would mark this one as stable, right? We're not going to change anything with this one. This one is actually a no change. CCI, so their payout ratio is pretty high. They don't have a 5-year growth number because they haven't been paying out dividends for that long. And then their 3-year, so then I typically will look at their 3-year. Their 3 years okay, it's not amazing, right? So if we wanted to look at a high 3-year, we're looking at something that is over 17%, and they're not really anywhere near that. So this is like a watch. So this is something to look out for. CCI is actually a real estate investment trust, and so we want to typically see high yields on those. Right now the yield is kind of low. Their price is probably going up, right? Hopefully they're increasing their dividend, but if you look, their payout ratio is already pretty high. These REITs tend to have really high payout ratios, right? They're basically all the profit that's in that real estate is getting paid out through dividends. So it's not something to actually concern ourselves with. So we might turn this into a stable. And this is where it helps to know what's going on with the company or what type of company it is, right? So you're not just kind of wildly doing things. So Chevron, CVX. This is a green yield, a high payout ratio, and not growing very fast. I've already decreased Chevron. So for now, we're going to say stable. Like last month, I actually decreased Chevron. Dominion is something that's fairly stable, right? It has a high payout ratio, but I'm happy with that. Nothing too concerning here. So now let's look at Disney and see if there's anything to understand or learn from Disney. So they have a low yield, but a high payout ratio. So this is a similar trend to Apple, right? And then they also have a low 4-year yield, which makes sense, right? Their payout ratio is really low. We really like that. Their 5-year growth, it's nothing to be excited about. It's a little lower than Apple, but this has some upside to it. So I think this is a slight increase, and we're actually going to add it to the portfolio. I should actually call this add to portfolio, right? ELS is a healthcare REIT, I believe, and so it is something, again, where they're typically paying out a high payout ratio, although this one isn't. Their yield isn't great, but nothing else is really like calling out to me. So this one is stable. EMR, let's see, slow growth. This is just like a slow, like steady growth. This is Emerson's, like a manufacturing stock. So this is something that you just want to kind of keep in your portfolio and not make a ton of change to. I mean, looking at the numbers, it's like super low growth, right? Like I might want to decrease, question mark, right? Like I might want to mark that down. Gilead is a no change. And then let's see, ITW, high growth, currently a low yield. This might be something, this is Illinois Tool Works. This is something where we want to increase. Whoops, I skipped right past HLI. Let's see, this is a kind of fast growing, but currently low yield. That's probably because their price is up, but their payout ratio is also fairly good. So this might be an increase, question mark. We might like fast forward through some of these because this is a long list. You probably don't want to see all 42, but remember, I'm going to put a video out, or each week I'm going to start putting out videos that analyze these companies in more depth, so that can give you some insights into my portfolio and like why I chose these companies and what should I do with them. And as I learn more about the company, I might make some actions. I might change some things in the portfolio, but hopefully it'll give you some educational information on what these companies are doing, what their background is, and why they might be a good dividend growth investment company for you. So then, okay, so now we've evaluated notes with kind of, should I add to the portfolio? Disney, the answer is yes. What are increases? What are decreases? What are stables? So then let's look at all my data again, and let's add a filter. And then for notes, anything that is stable or no change, we're going to remove. And so here are the action items, right? So I want to increase some things, I want to decrease some things. It all depends on how much allocation I have to these holdings already in my portfolio. So let's jump over to M1 and look at my portfolio. So as we look in here, because I have this split, the 60-40 split, we're going to have to do this at like multiple levels, right? So you can see Exxon here is at 8%. It's one of my highest holdings because I'm trying to like buy when their prices are really low. But right now I think it's actually time to decrease it. So we're going to decrease in 60, right? That's, kind of what I'm looking at here. We can click that ExxonMobil. You'll see like the latest and greatest news on them. If we jump back, let's check in my 40%. Right, is there Exxon in here? Yep, there is. It's at 2%. I think that's okay. We're going to leave that there for now, right? But essentially, like, what I want to do is go through the portfolio and see how much of these things I already own. Like Coca-Cola, we're not touching. Verizon is high. So actually, we want to decrease in 60, right? This gives me a place to add Disney. So I'm going to add in 60. And then what else can we decrease? So a lot of these are question marks. So actually the question mark ones in the increase area, like all my decreases are always question marks, but let's get rid of the increase question marks because I know I'm not going to have the space to actually do it. So I think EMR we actually already decided to eliminate previously. I don't see any in my portfolio, and I just forgot to take it out of Seeking Alpha. So this one is already gone, so already removed. So that gives me, Disney and some other ones to play around with. I'm trying to look at which ones make the most sense to definitely increase, right? So ITW has a red, so that tells me, not great. It's not all It's not all great there, right? I have 2 greens in AbbVie, 2 greens in ORI, 2 greens in Prudential, 2 greens in Valero. So I could do something where I increase all of them, or I could do something where I think, their yield is currently high because they're getting hammered in the stock market. So I think the 2 that make the most sense to me is increase for Prudential and increase for Valero. Like AbbVie, I'm actually trying to increase as well because it's fairly new to my portfolio, and I think there's just a ton of upside there. ORI, I think I'm going to leave kind of where it is, so no change for that. And then ITW, no change here as well because it's an increased question mark, excuse me. So I think that's what we're going to do. We're going to go into my portfolio and make those changes. But I'm going to cut the video off here. So you guys hopefully have learned how I evaluate my portfolio. If I remove these filters, you can kind of see all of the notes and actions that come about because of the analysis that I've done. Hopefully this helps. It gives you a little more quantitative ability to objectively evaluate your portfolio. So I'm hoping this helped you guys. If you like the content, make sure you subscribe, make sure you turn on notifications, make sure you give the video a thumbs up. I totally appreciate it. And look out for my upcoming series on individual stock analysis, right? So we're going to go through every single stock in my portfolio and make sure that you guys understand how I look at things and what information and resources are out there for you to learn more. So stay tuned for that. And I hope you have a great day. Keep investing, keep your head up through the coronavirus. Don't sell your stocks, right? Make sure you're investing, buying things on sale, like I said last episode, and have a great day.